My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey folks, welcome back. Today we've got a special treat. We've got Mr. Omar Khan zooming in from Dallas, Texas. And Omar is very interesting for several reasons. Number one, he's in the syndication business. He's done a lot of deals in multifamily properties in the States, but he comes to this with a very strong understanding of business and finance because he was a financial guy for a long time before he became a full-time syndicator. So we're going to be talking a little bit about that and what's going on with real estate these days. Welcome, Mr. Omar Khan.
Hey, thank you. I really appreciate it. What's going on, Dave? How's everything in Kamloops?
Life couldn't be better, my friend. It's living the dream, in the Kamloops dream. So Omar, give us a little snapshot here. What does Boardwalk Wealth do? What do you invest in? What's your buy box? What does a portfolio look like mid-2025?
Look, we're basically all multifamily, so we're sector specialists. We don't do anything else. We have a couple of verticals. Acquisitions is traditional value add. You buy it, you renovate it, hopefully you sell it in a few years. We haven't really done any transactions there in about 2 or 3 years.
Yeah.
We do a lot of developments. We've done about $200-300 million in developments and counting right now. And then I have a third vertical, basically where we've closed on about 1,300 to 1,500 apartments in the last 8 months or so, maybe 7 months, where all we do is basically a lot of syndicators, especially in the US, that are in trouble. We basically step in. I have an investment banking background. I have a great partner, and we step in, we restructure their loans, we take over their assets. And basically, that's the way we get into deals as well. But these are more distressed deals because we already have a management platform.
Yeah.
And a lot of the folks that seem to be in the typical syndicator bucket, I'm a syndicator, by the way, right?
Mm-hmm.
Do not have fully built out management teams at all. So we have a fully built out management and operations team. That's why, and we've gone full cycle with most of the major lenders. We have a great track record. So this is why a lender is more amenable to basically restructuring a transaction with us versus, say, a guy off the street that might show up in more money.
Well, I'm thinking your background helps with that a lot because previous to becoming a full-time syndicator, you worked in finance, so you can speak the language and you kind of know how these big deals work. So you got the 3 different verticals, the typical syndication, acquisition, fix it up, sell it. Haven't done much with that. How many development projects have you been working on recently? Like what percentage of your business these days is development versus the other vertical, which is kind of taking over troubled syndications?
So look, all we've done in the last 2.5 years is developments. Maybe more like 3.5 years.
Mm-hmm.
This whole restructuring transactions taking over, this is more of a recent thing just because a lot of syndicators are in trouble.
Yeah.
We provide them a solution which is both to the borrowers and the lenders right now. Most syndicators, most LPs in these transactions, they're wiped out. They know it. Everybody knows it. Because they basically gave their money to people who are frankly
didn't know what they were doing.
Yeah, that's 99% of the people out there, basically, because in a bull market, a lot of guys were selling you courses or blah, blah, blah. Well, you need marketing. Look, every business needs marketing, okay?
Yeah.
That's the way things are in life. But you can't be an empty vessel. You kind of have to have some substance. So right now is the time that you have to show that you have substance. And if you don't have a fully built out team, if you're kind of winging it, stuff's not really going to work out.
Omar, would you mind kind of sharing, without sharing any names or anything like that, sharing like a recent one of these properties that you've taken over? Just give us a little maybe snapshot. How many units? What was like the before? Like what did the guys get into when they originally bought it? Like how much it cost, and then how they get in trouble, and then what does it look like with you guys taking it over?
Everybody's gotten into trouble for the exact same reasons. Floating rate loans.
Yeah.
Okay, number 1, over leverage. Number 2, and number 3 is the fact that 99% of the people that you see online again, I keep saying this sounds like a broken record. They do not have a management team. They have no background in operations.
Yeah.
And for a good 5, 7 years, you didn't need a management background because you were just fixing and flipping.
And you're
And the market
floating up
goes
with the
up.
market. Yeah.
Yeah, the market's going up. So I get why things happened the way they happened. But now you kind of need to understand pretty much every single item. So to give you an example, this is a transaction, 80s vintage transaction in Fort Worth, Texas. I live in Dallas, very familiar with this area. The last guys bought it for about $28 million. We restructured the loan. We're in it for about $18.6 million. We put in about, I don't know, let me see, how much did we put in? We put in about $500,000 of our own money, and we are about to sell it for about $22 million. But
Nice.
I
And
think you understand these are more opportunistic things at
yeah, of
a
course.
moment in time as opposed to their cycles, right? I mean, when the market cycle starts going up, then this type of work will not generate any returns because there's frankly no reason for people to be in trouble.
Yeah, but then you'll be back on the syndication trail doing what you were doing before, I would imagine.
Yeah, look, we were doing all of this stuff anyways. Basically, this is what we do for a living. It just so happens that we have a very good background and understanding of these items. So, in the good times, we can do our regular line of work. And in the bad times, we can bolt this on as well, basically as a means to hopefully provide value to our investors.
Exactly. So the properties that you're taking over in this situation, is it like you mentioned, usually like the primary operator, the lead sponsor, what have you, they're wiped out, their investors are wiped out, and you're just kind of getting in there,
We're
basically.
basically coming in, Dave. It's a very simple thing. If you lost all your money, the next step is why would you want a foreclosure on your record?
Okay, fair
And
enough.
conversely, basically, for instance, if you're a lender, people think that, oh, I'm just going to give the keys back. It's a non-recourse loan. Stuff doesn't really work like that in the real world, man. Right? Because there is a reason why. No, there is no idiot on the planet that's going to hand you hundreds of millions of dollars and you just give them your keys and you walk away. Nobody's going to make your life that easy. It doesn't matter what your loan documents say. People are going to who have the ability to give you so much money also have the ability to make your life very miserable, right? Because
Yeah.
you can't, these both things typically go hand in hand, right?
Yeah,
They,
yeah.
they're not like you can't get one without the other. And but the lenders also realize that you can't get blood out of a stone. If a guy's broke, he's got no money, then yeah, they can beat him all they want, but he's got no money. So what
Yeah.
are they going to do about it? So that's where we step in, but we provide a helpful mechanism through which the borrower isn't in trouble. Their investors don't have to face capital calls, any of that environment. And by the way, the lender is also not in trouble because look, if you have to take over an asset, that requires a significant amount of cost, number one. And then
Yeah.
a lender is also not equipped to basically operate these assets.
Yeah, they don't know how to manage it either, right? They don't want to. That's not their
Even
business.
even if they know how to manage it, that's not their line of work, right? They have a
Yeah.
different line of work. It's the same way as you're in one line of work, I'm in a different line of work. Can you do my job? Probably, maybe. But why would you spend any time trying to do my job? You should just spend more time trying to do your job,
Yeah.
right? Same reason applies to me, same applies to you.
So basically, if I understand correctly, Omar, you're getting in there pretty much at cost or what the guy owes the bank. That's kind of what you're taking it over. Or in some cases, are the lenders losing a bit? Is it almost like back in the day when they had those sub two type deals? It hasn't
Yeah,
gotten that bad, I wouldn't think.
Dave, that shit doesn't exist. Okay. All these clowns online that talk about sub twos and all. Yeah,
Yeah.
that stuff doesn't exist unless you're a poor person and you're buying like some assets in the ghetto.
Yeah. Yeah. Yeah.
Doesn't exist like that in the real world. Again, I mean, I have no idea how people just go online, they see some guy on Instagram and they just kind of lose it. There is no secret. There are no secrets. The secret is you just need to know how to do your job, right?
Yeah.
That it, by the way, applies in every line of work, right? Whether you're in sports, whether you're in finance, whether you're a doctor, lawyer, plumber, electrician, you can't wing it forever, right? You kind of sort of have to know how to do your job. And if you don't know how to do your job, then typically you get caught, and then it's not a pretty
Yeah.
set of circumstances.
Yeah.
So
Most definitely.
not there's no major haircuts. There's some ways to restructure this. You can get the terms in your favor somewhat depending on the transaction. But this
Yeah.
whole sub two thing, all of this thing, this is basically a way for all these guys that sell courses online to sell to other poor people who will then get more poor as a result of trying to take shortcuts as opposed to actually just putting in the time and trying to work. Because
Yeah, fair enough.
it's like, say, a couple of more months to learn how to do your job. But once you learn how to do it, nobody can ever take it away from you because I don't know if you know, there was a really famous comedian, Patrice O'Neill, really funny guy.
Yeah.
And he had a really famous saying, shortcuts to cash flow are long cuts to life.
I never heard that one before. That's a good
So,
saying.
yeah, so a
Yeah.
lot of guys, well, look, we all want a shortcut. I love a six pack and to play in the NBA, but that stuff ain't happening, man. That's
Well, the six pack, you might be that one could be doable. Okay, well, getting back to what you're doing.
yeah.
Okay, so you're getting these properties pretty much for what's owed on them, give or take, right? That's pretty much it. And then what's the exit strategy and kind of how long is it taking you to turn them around or exit those?
We can sell most of these assets the next day or within three
Wow.
months for more money. The reason why we haven't done it is because why would I want, unless I get a sweetheart of a deal like we're getting on this Fort Worth thing,
Mhm.
uh, where we basically 6, 7, 8x our money, basically, right? Why would I sell in today's market, right? Because these are all
Mhm.
assets that, apart from all this capital stack issues, typically are also run by, again, don't have a management team, a lot of
Mhm.
deferred maintenance. Occupancy in the submarket is say 92, 93%. They're in the 70s, right? So the thought process is, look, if we have a guy that shows up with a bag of cash, everything's for sale. Short of that, we've already done what 10-ish or so of these deals. We've got another 1,700 units in the pipeline that we're closing in the next couple of months. You can aggregate these. Just do what you were normally going to do anyways and sell one
Yeah.
in the next 1 or 2 years when the market's a little better.
Yeah, no, that makes a lot of sense. I was just curious what the plan was there.
Yeah.
So Omar,
In that regard, there is no like creative plan. The plan is always you buy at a good basis, you do your job, and then you pray to God. Hopefully things work out.
so do you focus like how many different markets are you guys in where you're able to self-manage your properties?
So we are in Texas, Georgia, Florida, Arkansas, Kansas, and South Dakota.
Okay.
Yeah.
And do you have third party management in those places
On
that you
some
kind of
assets
manage?
we are third party, other assets we are just in-house.
Got it. Got it. Got it.
It
All right,
depends on
Omar.
the
Yeah, and as we're kind of halfway through this year, I imagine you're going to keep doing more of that. Are you doing more development projects as well?
Yeah. We are
Yeah.
constantly doing development projects. Basically, we closed on one earlier in the year. We are about to close on phase two of Jefferson Reserve. We got like $500,000 left there, and we have another phase one of another project where we just launched. So we've got like 5 or 6 million left to raise. Basically, all the land is entitled, zoned, ready to go. Like I said, there are different verticals.
Hmm.
So each vertical has its own timeline and how it works,
Of
basically.
course. So
Yeah,
in development, there's lots of people doing different things in that. Are you doing the full gamut from finding the
yeah. We do the
properties and then
entire thing.
building them completely out, or what does it
Yeah,
look
we find the land. I got great partners and myself. We find the land, we finance it, we have it zone and title. If it's not zone and title and shovel ready already, we arrange for the financing, we raise our money as well, and then we've obviously develop it and manage it.
Very
Yeah,
cool. Omar, it sounds like one thing that you've really dialed in well is raising private capital. And
yeah,
a lot of our viewers and listeners are kind of interested in that, especially when it comes to finding LPs, finding private investors. Not so much they're not quite ready for the institutional stuff like you've got experience with as well. But what do you find works best for you guys for syndicating your properties, finding the limited partners for your deals?
well, look, what works well for us, especially these days, is we have a great track record.
Hmm.
And we also know how to do our job. So, for instance, if somebody asks us how to do our job, hopefully we can explain to them soup to nuts on how we go from inception all the way to the other end of the cycle, which is a sale. Again, I think a lot of what's happened, especially before this market started going sideways or down, was that it was seemingly so easy to get in the game that a lot of people got and they skipped a lot of steps in between.
Yeah,
Now,
yeah.
a lot of those people are being found out the hard way. So, look, people have been burned immensely, like a lot of people have been burned immensely. They're just not going to hand you your cash. If you're, my point is you can't just have a great website or Instagram and expect to raise a lot of money. You kind of need to know how to do your job because
Mhm.
people are more informed, and every year they get better and better and more informed, right?
Yeah.
So unless you don't know how to do your job, yeah, will you get money one off from people? Possibly. I mean, there could be a good relationship or something. But if you want to programmatically, consistently, all the time get money, there is no substitute for actual substance. That days where you could just be flashy, kind of write a good email, yeah, that stuff doesn't really work the same way. But
So
again,
what,
it's part of the
what
cycle, right? The part of the cycle.
exactly.
Yeah.
So what do you do these days to like connect with new potential partners and engage them and bring them on board with your
Well,
project?
look, I think we're lucky now that because we have a track record, a lot of the folks that are coming in, look, there's most of them are existing investors, so that's really good.
Yeah.
Most people coming in are referrals, so
Hmm.
that's also really good. And the other issue also is that we have a very robust presence. I have a fully built out sales team that's talking to RIAs, wealth managers, individuals, family offices. So we're constantly in the market introducing ourselves, right? And there is, I wish I could tell you there is this one thing, because if there was this one thing, man, I put all my money and resources into that. A lot of this is, for instance, I'll give you an example. A lot of this is stuff that happens because you might have had a chat 2 or 3 years ago with somebody. There's one
Right.
guy, he's giving us $2 million. He's got a 1031. And I had a chat with this guy, like, I think 3 years ago. I've never really talked to the guy again. And then out of after 3 years, he reached out to me, and I kind of had to look in my CRM to find out we did actually have a chat. So I think a lot of it's like people with real money will kind of see what you are doing over a period of time. So it's not a quicker conversion cycle. It's not like I
Yeah.
talk tomorrow, tomorrow I get the money. It's more like people see what you're doing, and if you're doing a good job, then eventually along the way, hopefully more people join. But there is no like one specific way, because if there was, frankly, I'd do it all day. I'd forego everything and just do that.
So to get the word out about what you're doing and what you're up to, what do you guys typically do these days? Are you posting on social media? Are you, I know
Yeah,
you've got
look,
a
we do
YouTube
that. I
channel.
mean,
What do you do?
no, 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 hold on. We do that. The YouTube channel isn't really a marketing tool for us. Just my team sometimes posts it. Look,
Mhm.
posting on social media is nice and cute, but I think other people are also posting on social media.
Yeah,
I'm
for
not
sure.
the only person with this brilliant idea. So a lot of times it's not actually saying what you're doing, it's actually showing what you are doing.
So what
Because
do
a
you
lot
mean by
of
that?
people, what I mean by that is a lot of times people are posting these stupid motivational quotes. I mean, anybody with half a brain or money is not going to give you money because you say you are a hustler and you're a
Especially when you got ChatGPT to create
yeah,
the post for you. Yeah.
and you know you are going to work hard. I mean, these are nebulous items. Who gives a shit, right? Everybody works hard, right? The guy at McDonald's works hard. Are you going to give him your
Mhm.
100 grand? Probably not, hopefully, right? What happens is, for instance, a lot of times people say, oh, I was at one of the open houses in your developments.
Mhm.
Or, for instance, I've seen that you had these phases on your projects, development projects, and I kind of followed over the 8 or 10 months. And you said you were going to deliver units in the 8 to 10 month mark. You delivered units in the 8 to 10 month. So now that is proof of concept of what's doing. So if you'll see with a lot of our posts or communications, we don't put a lot of icons, no emojis, none of that stuff. But this is just my personal opinion. I think that stuff is childish and attracts poor people. I mean, from a financial point of view, it is not lucrative. You want people with more money. That's just
Right.
that's the way things are in life, right?
Yeah.
So your audience, typically the people that have more money, will not resonate with these stupid, cute things, or rather, typically they don't. Maybe you find one off person. So for
Yeah.
us, it's a combination of items. For instance, our track record, showing what we're doing, then going out and introducing ourselves to people. So I have a sales team. We're hiring another salesperson. My background is in portfolio management. We are talking to more RIAs, wealth managers, that sort of stuff. We go to them. Why would they want to work with us? Because their clients want an alternative investment exposure. So now they want to work with a top tier manager. Who are they going to work with? They can't just go find these opportunities to then
Mhm.
introduce to their clients. So that's where folks like us will step in. So combination of factors, but
Yeah.
at the end of the day, none of this stuff works if you don't actually go do your job and then consistently do your job for like years and decades on it, right? Because a lot of this is lagging effects of things you might have done 1, 2, 3, 4, 5 years ago.
Very, very well said, Omar. All right. As we're wrapping things up here with our conversation, my friend, if people want to connect with you, find out more about what you guys are up to, where should they go?
Yeah, well, look, you can go to my website. That's boardwalkwealth.com. You can join my mailing list if you like. The form is right on the homepage. Again, that's at boardwalkwealth.com.
Awesome. Omar, thanks very much for being on the show. This has been a lot of fun.
I really appreciate it.
All right, everybody, take care, and we will see you on the next one. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.